You're listening to the Option Alpha podcast from OptionAlpha.com, where we show you how to make smarter trades, learn how the stock market really works, and generate consistent monthly income. Now, your host and head trader at OptionAlpha.com, Kirk Duplessis.
Hey everyone, this is Kirk here again from OptionAlpha.com, working every single week to make this the most popular investing podcast offered in iTunes and online because it's based on one thing and one thing only, and that's helping you make smarter trades. So thanks so much for tuning in today. We got a really cool episode talking about the top 3 excuses that investors make when trading options. And really these excuses can kind of run the gauntlet as far as they are applied really pretty much to any business concept or investing concept or venture that you want to get into. I know that personally for myself, I've run into these all the time, not only in my own trading, but also, as we start to build our real estate portfolio and also building a business online. You can run into these same kind of general type of excuses as you're trying to build out anything. But today we'll focus mostly on how it relates to options trading, obviously, and how it can make you a smarter, more successful trader, because I think that these excuses are not things that we necessarily talk about or are outspoken. Like, we don't tell ourselves, hey, you're making up this excuse. A lot of these things are subconscious. They dwell in the subconscious part of our mind, where they basically kind of decay and rot away our confidence in being able to do this successfully long term. So my goal in this podcast is to hopefully bring out these excuses, shine some light on them, and help you move past them so you can be more successful as an options trader. Now, before we get into the excuses today, I just want to let you know that our free download for this podcast is our ultimate strategy guide. So if you're new to Option Alpha or new to the podcast, all you have to do is go to optionalpha.com/ebook and you can get our complete ultimate strategy guide. It basically walks through every single trading strategy that we have and helps you define the strategy, helps you set up the strategy, talks about timeline for the strategy, when it works best, like what timeline you should be trading it on, a 30-day timeline or a 60-day timeline. And it also talks about what type of market situations that particular strategy works best in. So again, it's completely free. You can download it from our website. Just go to optionalpha.com/ebook. All right, so let's get into these top 3 excuses. Now, excuse number 1 is that things are too complex. And I hear this one all the time. And whether you, again, say it to yourself out loud or talk about it with your spouse or significant other, most people have this underlying theory that options trading is completely too complex. Now, here's what I would say to this, and really anything else in life, and I'll give you some great examples, is that anything can be incredibly complex when you dig deep enough into it. Now, our goal and my goal in doing this podcast and obviously the Option Alpha website and membership is to help you find these trim tabs or levers that leverage a small amount of information to give you kind of the maximum result. Now, again, everything is incredibly complex when you dig down deep enough. So let's use a great example, which is your car, right? Most people have a car. You might be driving in your car right now. You understand that a car is incredibly complex, right? You've got the engine, you've got the drivetrain, you've got the wheels, the tires, the steering. Everything that goes into a car is incredibly complex when you start really, really digging down deep and thinking about it, right? But the end result is that a car is there to get you from point A to point B. And it wants to get you there as quickly and as safely as possible. So you have to understand that all you need to really operate that car are basically 3 things. You need the steering wheel, the gas, and the brake. And with those 3 things, and obviously the ability to see where you're going, but with those 3 things, you can operate this incredibly complex machine and get you exactly where you need to go. Now, what most people do when they start trading options, or even if you've been trading options for a while, is that you try to understand everything. You want to know exactly how the car works, why it goes forward when you do this, why it goes back when you do that, how every little engine piece works. And the reality is that we just don't have enough time and knowledge to understand every intricacy in the market. And nor do we really want to at the end of the day, right? We just want to get from point A to point B. We want to get from where we are now trading, maybe not making money or making a little bit of money, to starting to replace our income on a consistent monthly basis or starting to really grow our retirement portfolio. That's the goal, right? So in my eyes, we want to get there as fast and as simple as possible. So, although it can be really complex, and believe me, options trading is not a walk in the park, it's not like baking cookies, right? It's definitely a complex subject, but you have to focus in on those trim tabs or those levers that help give you 80% of the results by only doing 20% of the work, right? And so we'll talk about that here towards the end, and I'll give you kind of my top 5 things that I think you have to do to be successful as an options trader. Now, another excuse that most people have is that you have to trade options too frequently, right? So we often hear this, and this is kind of vilified in the media. We get punched in the face pretty much every day in the media with somebody coming out and saying, you can't be a high frequency trader or you can't trade too much. You have to be a long-term value investor. And I'm sure that there's some validity to buying something and holding it for the long term, but that's just not what we're about here. I think that frequency when it comes to trading options is what creates consistency in your portfolio. Again, if we're going to be and believe in this system of trading high probability strategies, then we have to understand that high probability trading by itself defaults to the need to have a lot of different trades, right? If you're trading an 80% chance of success trade, you might not hit your 80% chance of success on the first trade, or you might not hit it on the first 10 trades, right? But I guarantee that if you make an 80% chance of success trade and make that same type of trade over and over and over again, and maybe say make 1,000 trades, I guarantee that almost 800% or 800 of those, or very close to that, is going to be a winning trade, because that's how the numbers work out long term. So again, if you're going to believe in this system and believe in any high probability system, you have to understand that frequency is really your friend. This is what you want. You want a lot of different trades, very small, but you want a lot of different trades so that those probabilities play themselves out over long periods of time. What I often find when new people come to Option Alpha and have been other places is that they're jumping around all the time. And even some people that sign up for Option Alpha and then maybe 2 or 3 months later they cancel, is that they just don't understand that consistency gets better and your probability of success gets better the longer and more often you trade. So I always tell people is that the worst thing that you can do is if you make a bad trade or a losing trade is to stop trading. Because at that point you've given up and now you no longer have the opportunity to reverse that trend and make higher probability of success trades. The longer and longer you trade, the more consistent you'll be. It's just how the numbers work out. So hopefully that gets you over this excuse of the need to trade too frequent. Now, the last excuse that we have that most or average investors or traders make is that there's too much responsibility, right? I mean, this is a classic one that we all kind of fear deep down inside, is that if we invest by ourselves and on our own, then we are really in control of our own destiny. On the outside, that's what we all want, right? We want to do this on our own because we feel like we could do it. But then we have this little kind of voice inside of us that says, hey, but if you do it yourself, then that means you've got the responsibility if you lose, right? I mean, we all think about winning and making a lot of money doing this, but what if we lose on a trade? Then we have that responsibility. And honestly, some of us feel like it's too much responsibility. We would rather blindly invest in something else, maybe a stock or an ETF or a mutual fund. We'll blindly give our money to that type of investment that we know may or may not get us to where we want to be with our goals. And by doing that, then we release that responsibility. Then we can say things like, well, the market turned around, or the economy was bad, or, the oil sector was bad, or there was something happened over in Europe and that caused the euro to go down. So my investment went down. So we release that responsibility. But the problem with doing that is that it never gets us to where we want to go. So if you want to be a really successful person, you have to take responsibility for your actions. And if you want to be a really successful trader, you've got to take responsibility for your portfolio. Now, one thing that I can tell you that might help in kind of overcoming this excuse of responsibility is that we need to control our emotions. And one thing we can do to control our emotions is to properly manage a position on the trade entry. So we release a lot of responsibility or basically fear in losing money if we are smart about how we size our positions. So I often find that when people get started and they take on this responsibility of trading their own money is that they go for the home runs, right? They swing for the fences. And what we need to do is we need to make small, consistent, high probability trades time and time again, week after week, month after month. And that's what really leads to long-term success. So one way that we can take on responsibility and also manage our fear in losing is to trade small and trade often. Okay, it's often been said all over the market, and you hear it all the time by very top prominent traders. But that's the reality. That's how the numbers work out in our favor. So hopefully you guys have enjoyed today's podcast talking about these top 3 excuses. Again, excuse number 1, it's too complex. Excuse number 2, it's got to be too frequent. And excuse number 3, there's too much responsibility. Now, before we get into the closing bell, I just wanted to go over, like I had mentioned earlier, kind of my top 5 things or reasons or things you need to do to be successful trading. So again, my goal here at Option Alpha is to take really complex things and boil them down into very simple but powerful concepts for you. So here are my top 5 things. Number 1 is you have to trade small positions. We talked about that earlier, but it's the number 1 thing that you can do that'll make you more successful. Number 2 is you've got to trade positions with a high probability of success. Again, if you don't start with a high probability of success, you won't end with a high probability of success. Number 3 is you have to trade liquid stocks and options. If we need to be making small, frequent trades, then you've got to be able to get in and out of stocks with minimal slippage. Number 4 is that we have to use the right strategy in the right market. Not every single option strategy works in every single market. Just like not every tool that you might have in your toolbox will accomplish the same goal, right? You might have a saw, which is meant for cutting. You're not going to use a saw to pound in a hammer, right? So the same thing works with options trading. You're not going to use a calendar when implied volatility is high, and you're not going to use an iron condor when implied volatility is low. So number 4 is that you have to use the right strategy in the right market. And again, our ultimate strategy guide, which you can download for free at optionalpha.com/ebook, is going to help you pick which strategy works best in which market situation. And number 5 is you have to do all of these things as many times as you can. We talked about frequency earlier, but if you only do this one time is not going to lead you to being a successful trader. You have to do this as many times as you can. And that's different for you or for me, but the longer you do it and the more consistent and persistent you stay with this options trading and high probability system, the more opportunity you have and the better your chance of success long term. All right, so hopefully you guys enjoyed this. As always, you can take a look at the show notes and download all the links by going to optionalpha.com/show29. All right, so let's get into the closing bell.
Now, the closing bell. Find out which stocks we're looking at right now, trades we're making, and hear our game plan moving forward.
All right, so in today's closing bell segment, I want to talk about a new trade that we have just placed, and that's a trade in FXE. So FXE is a Euro ETF, and I think we've talked about it here a couple times on the podcast, but it's been in this level of very consistent and very high implied volatility. And as options traders, that's what we want. That's really when our edge is maximized in the market, by selling these options that are overpriced long-term to their kind of statistical average. So right now, implied volatility in FXE is in the 91st percentile, which means that almost 91% of the time going back over the last year,